I'll keep things moving and welcome Robert Carling from the Centre for Independent Studies.
Tax and trade. I'm going to talk about the taxation part of it, and you must be the truly committed to still be here on Sunday afternoon, on a nice Sunday afternoon in the harbour city, to sit here and hear people like me drone on about taxation policy. But anyway, that's what you're going to get this Sunday afternoon. And it has been a fairly significant week, this past week, for tax policy wonks, because we had the launch of President Donald Trump's tax plan. I think there are a couple of good things about it and a couple of not so good things about it. One is that he has stuck to the proposals that he had during the election campaign. He's not retreated from any of that. He may have in certain other areas, but not on this. And secondly, it sets some very desirable targets of a company tax rate of 15% and reductions in personal rates with a top rate of 35%. I would love to see those rates achieved in the United States. I would love to see them achieved in Australia. I think they would be wonderful for economic growth. They would be wonderful for economic freedom. But there is a however coming. There is no explanation of how the plan can be implemented in the context of fiscal responsibility or ultimately a balanced budget in the United States. Now, I know they say that, there are two schools of thought on this. One is that you can starve the beast. You can use tax policy, you can use tax cuts to starve the beast. That is, cut the taxes and expenditure cuts will somehow follow. History has shown that that has not been the case. Secondly, there is this the proposition that tax cuts will spark faster economic growth and they will be self-financed. They will generate additional revenue through the higher economic growth and pay for themselves. I think there is something to that, but you wouldn't want to rely on it to fund the whole lot. This is what the Americans call, they have their own term for everything, and they call this dynamic scoring. You allow for the extra revenue generated by the extra economic growth unleashed by tax cuts in your budgeting for how it's all to be paid for. So I don't think that you can rely on. There's too much of the former Treasury officer in me to rely on that, and I don't think you can just throw deficit caution to the wind. So there has to be a more fleshed out plan for how all of this is going to fit together, and that's what's going to happen when it gets into Congress, and goodness knows what the outcome will be. But as I say, the targets are very good ones. And the launching of this, there are going to be two lines of opposition to the Trump plan. One will be that it can't be paid for, and we can talk about that. But the other one will be that people just can't stand the idea of lower tax rates for companies and especially wealthier individuals. Regardless of any deficit considerations, they couldn't stand it even if there was a budget surplus. The response to those people is quite different. So I think that the focus should be on how the plan can be implemented rather than whether its goals are desirable, which I think unquestionably they are. Now, turning to Australia, and by the way, on the generation of faster economic growth, the supply side response from tax cuts, I don't want to go into the arcane voting rules of the United States Senate, but under certain scenario, yes, there could be tax cuts, but they are time-bound. That is, they automatically expire after 10 years, I think. And that's what happened with the George W. Bush tax cuts. And the automatic expiry came up under the Obama administration. And those kinds of tax cuts are not nearly as beneficial as tax cuts that are permanent, or at least where the default position is that they remain. Under the time-bound ones, the default position is that they disappear after 10 years. And that puts the opponents of the cuts in a stronger position to stop them in the end. So turning to Australia, we learned this week that in an Australian Bureau of Statistics release, that the total tax burden in Australia is continuing to edge up, whether you look at it as percentage of GDP or per capita or real per capita, it's going up. In the last year, 2015-16, and it takes the ABS 10 months to come out with these figures for some strange reason, but anyway, in the last year, 2015-16, it was 28% of GDP for all the levels of government combined, and that has been inching up year by year, and it will continue to inch up. That is how the budget, the federal budget deficit, will eventually be balanced, if it is balanced under current plans. It will be balanced by the automatic increase in average tax rates through this insidious process of bracket creep. So if Scott Morrison and Malcolm Turnbull wait long enough, yes, the budget will be balanced through that process. It's just, it has happened in history and it will happen again. It's just that this time it's taking a bit longer to happen. And I believe that, in essence, is their plan for balancing the budget. It's bracket creep. And we're seeing it happen already. But the tax debate in Australia is quite deplorable. We've seen that. It's the worst I've seen since I've been watching these things, and that goes back a long way. It's deplorable. For example, in the company tax debate, you have a relatively modest proposal from the government to reduce the company tax rate from 30 to 25% over 10 years. But despite the relative modesty of this proposal, you have seen red herrings galore thrown at it from its opponents, and they're all red herrings. And the public discussion of taxation in Australia has come to be like this. First of all, it ignores or simply does not understand what economists call high marginal deadweight costs of taxation. Secondly, it proceeds on the assumption that companies and better off individuals don't pay tax, or they don't pay the so-called fair share, whatever that is. Thirdly, it proceeds on the basis that taxation is all about redistribution and inequality, and that every change in tax policy has to ratchet up the degree of redistribution and progressivity. And fourthly, it assumes that the budget deficit is entirely due to a shortage of tax revenue and has nothing to do with too much expenditure. This is essentially, these are the four planks underpinning this deplorable tax policy debate in Australia now. And as I said, the only serious reform on the table, the cut of the company tax rate to 25%, is being countered by every red herring imaginable. We've seen how effective the campaign against superannuation tax was, or to increase superannuation tax, and we're seeing the same thing happen now on so-called negative gearing and capital gains tax. And I have no doubt that the way things are going, that campaign will be ultimately successful for those waging it. And I don't think we've heard the last word on superannuation either. So I think people like us, we need to counter all of this. And if we don't do it, there are not many other people who will. It certainly won't come from inside government. And it doesn't come from many in academia, with the notable exception of good people like Sinclair Davidson. We need to be taking every opportunity to emphasise that the economic costs of increased taxation, and you don't have to use the term marginal deadweight cost, but the economic cost of taxation are so high per dollar raised that they exceed any conceivable benefit of increasing spending from where it is now, and they exceed the benefits of a lot of the dollars that are already spent. So on a cost-benefit analysis, increasing taxation makes no sense. Secondly, that companies and the top 25% of individuals are already paying a great deal of tax. Roughly, the top 25, and you should tell this to everyone who's willing to listen, that the top 25% of individual income taxpayers generate 50% of the taxable income, but pay 2/3 of the total tax paid. The top 1% pays 17% of all the tax paid. So all of this talk about all these millionaires out there who pay no tax and the companies who are dodging their tax completely is complete nonsense. Thirdly, we need to be emphasising that the tax transfer system is already highly redistributive, and inequality is not increasing in Australia. And the onus is really on those who say we need more redistribution and more progressive taxation to make the case as to why it needs to be. And as I said before, if the federal budget is going to reach balance as planned, it will only be because of bracket creep, lifting the overall tax take. The government needs to be less passive and do the job by cutting spending. I'll leave it there.